On the morning of July 5, 1991, regulators in 7 different countries walked into the offices of the same bank at the same hour. Nobody called ahead. By the time the markets closed, the 7th largest private bank in the world had simply stopped existing. 1 million people could not get their money. This is the story of a bank that was built from its very first day to lie. It started with one man. Aga Hassan Abedi was a Pakistani banker with a gift most bankers do not have. People trusted him instantly. In 1972, he founded the Bank of Credit and Commerce International, and his pitch was clever. He would build a bank for the developing world, run by people from the developing world. For the customers, the big Western banks could not be bothered with. He had powerful friends. The ruler of Abu Dhabi, Sheikh Zayed, put in money. Bank of America took an early stake. With that backing, Abedi moved fast. Within 10 years, BCCI had hundreds of branches in more than 70 countries, from London to Lagos to Hong Kong. On paper, it looked like a miracle. A bank that came from nowhere and was suddenly everywhere. At its peak, BCCI claimed around $20 billion in assets. Close to 1 million depositors trusted it with their savings. It operated in 73 countries, and almost none of those numbers were real. Here is the problem with growing that fast. Abedi wanted size more than he wanted profit. To pull in deposits, BCCI paid savers more than its rivals did. To win clients, it lent money it should never have lent. The bank was spending more than it earned, and the gap had to go somewhere. So they hid it. And once you start hiding losses, you cannot stop. BCCI was designed so that no single person could ever see all of it. The holding company sat in Luxembourg. The real operations ran out of the Cayman Islands and London. No one regulator had the full picture, and that was the whole point. A bank spread across the gaps between countries is a bank that answers to nobody. Then there was the audit. Most banks use one accounting firm that checks the entire business. BCCI split its books between 2 firms, so neither one ever saw the whole thing at once. If you cannot be audited as a single company, you can bury almost anything in the space between the 2 halves, and they buried a lot. The biggest secret was the lending. BCCI handed out enormous loans to insiders and to a small circle of favored clients, loans that everyone involved understood would never be paid back. One shipping group run by the Gokul brothers borrowed so much that on its own, it could have brought the whole bank down. The money was gone. The bank just kept pretending it was still there. A bank with a hole that size needs cash, and it stops being picky about where the cash comes from. BCCI became the bank for people other banks would not touch. Manuel Noriega, the dictator of Panama, kept tens of millions of dollars there. When you are hiding money from the world, a bank that hides itself is exactly what you want. It got darker. BCCI moved money for the Medellin cocaine cartel. It handled funds linked to the terrorist Abu Nidal. It sat quietly inside arms deals and sanctions busting. For criminals and dictators, this was the perfect machine. Deposit your money in one country, pull it out in another, and no auditor on earth could follow the trail. And it was not just criminals. Western intelligence agencies used BCCI too. The CIA ran accounts through it, because a bank that hides money from regulators also hides money from journalists and from rival governments. For years, being everybody's secret was very good for business. The trouble with secrets is that they only hold until one person talks. To get rich, BCCI needed dirty money. To stay safe, it needed something else: respectability. So in the early 80s, it set out to buy a piece of the American establishment. Quietly, through a group of front men, BCCI took control of one of Washington's most trusted banks, First American. On paper, BCCI owned none of it. In reality, it owned all of it. The man who put his name on First American was Clark Clifford. He had advised 4 presidents. He had been Secretary of Defense. In Washington, his word was as good as a signature. Clifford and his partner, Robert Altman, ran the bank, swore they had no idea BCCI was the real owner behind it, and lent the whole arrangement an air of total legitimacy. It worked for years. With a respected American bank as a shield, BCCI looked less like an offshore mystery and more like a serious global player. Regulators relaxed. Politicians took the meetings. By the time anyone asked the obvious question, who actually owns this bank, BCCI had already used the cover to grow far beyond anyone's reach. And it ran the same trick in other countries too, hiding behind local names and respected locals, so that in each place it looked like an ordinary domestic bank. There was no single BCCI you could point to and shut down. There were dozens of masks and the same rotten machine sitting behind all of them. There was another reason BCCI survived so long. It was useful. Western intelligence services did not just tolerate the bank, they used it. A bank with branches in all the places spies needed to move money, no questions asked, was worth keeping alive. The CIA later admitted it had held accounts there. A United States Senate investigation, led by Senators John Kerry and Hank Brown, spent years pulling the thing apart. What they found read like a spy novel. BCCI had moved money for weapons deals, for sanctioned regimes, for intelligence operations that no government on Earth wanted to explain out loud. That created an awkward problem for the people who were meant to shut it down. How do you put a bank on trial when its filing cabinets hold secrets about your own spies, your own arms deals, your own dictators on the payroll? For years, the most convenient thing for a lot of powerful people was simply to let BCCI keep running. The first real crack came in Tampa, Florida in 1988. United States Customs ran an undercover sting they called Operation Sea Chase. Agents posed as drug traffickers looking to clean their money. BCCI officers were caught on tape explaining in detail how to launder it. The bank had walked straight into the trap. You would think that would be the end. It was not. BCCI pleaded guilty to money laundering, paid a fine, and carried on as if nothing had happened. The regulators still had no idea how deep the rot went. They were treating a gunshot wound with a sticking plaster because nobody had been allowed to look at the whole patient. Then someone finally did. The Bank of England asked Price Waterhouse to audit the entire group, all of it, at once. What came back was a report so alarming, it got a code name inside the bank. They called it the Sandstorm Report. It laid out fraud on a scale that even the people chasing BCCI had not imagined. There was no fixing this. There was only shutting it down. When the Sandstorm Report finally landed, it confirmed the worst. Billions were missing. The losses had been hidden for over a decade, rolled forward year after year with fake loans and invented deposits. Price Waterhouse told the Bank of England in plain language that this was not a struggling bank that needed help. It was a criminal operation, and it had been one almost from the start. Which brings us back to July the 5th, 1991. Regulators had learned the bank's own trick and turned it around. Instead of acting in one country, where BCCI could shuffle money out the back door, they moved everywhere at once. 7 countries, 1 coordinated hour, every major branch locked at the same time. For the first time, the bank could not run. And then the real victims appeared, not the dictators, who had long since moved their money, the ordinary ones, families who had saved for years, small-town councils, charities, hospitals in Pakistan and Bangladesh that banked with BCCI because Abedi had sold himself as one of their own. They woke up to locked doors and frozen accounts, and most of them never saw their money again. So, who paid for it? Abedi was charged, but he had fled to Pakistan, and Pakistan refused to send him back. He died there in 1995, a free man, never having stood trial. In the United States, the scandal pulled in 2 of Washington's most respected lawyers, Clark Clifford and Robert Altman, over a bank they fronted that BCCI secretly controlled. The Bank of England did not come out clean either. A formal inquiry, led by Lord Justice Bingham, found that the regulator had seen warning signs for years and had been too slow and too trusting to act. The lesson the world took from BCCI was simple and uncomfortable. A bank that nobody can fully see is a bank that can hide anything at all. For the people who lost their savings, the story did not end in 1991. It barely started. The job of picking through the wreckage fell to liquidators, and it would take them more than 20 years. BCCI was tangled across so many countries that just working out who was owed what became a project measured in decades. Some depositors went after the Bank of England directly, arguing it should have closed BCCI years earlier. The case ground through the British courts for the better part of a decade, and in the end, it collapsed. The regulator paid no damages. The people who had trusted the system were told, in effect, that nobody was legally to blame. There was one small mercy. Because BCCI's assets were chased across the globe for 20 years, the depositors eventually got most of their money back. By the early 2010s, more than 2 decades after the doors were locked, creditors had recovered around 90 cents on the dollar. By then, most of them had long stopped expecting anything at all. Agha Hassan Abedi, the charming founder who started all of it, never saw the inside of a courtroom. He had suffered a heart attack years earlier and was living in Pakistan, which turned down every request to hand him over. He died there in 1995, surrounded by his family, a free man to the very end. But BCCI did change one thing for good. Bank regulators around the world looked at how a single institution had hidden in the gaps between their borders, and they rewrote the rulebook. The principle that one regulator has to be able to see a bank's entire global picture became known, quietly, as the BCCI standard. The bank was gone. The lesson it taught was not. Think about what it actually took to run this for 19 years. Not one rogue trader, not one bad quarter, a whole bank, thousands of staff, presidents and spies and auditors, all looking at the same numbers and all choosing, for their own reasons, to look the other way. That is the uncomfortable part of the BCCI story. It never really hid in the shadows. It hid in plain sight. BCCI was not a normal bank that went bad. It was a fraud wearing a bank's clothes for 19 years, and it almost got away with it for good. If you want the next collapse, the next empire that was rotten from the inside, this channel takes them apart, one case at a time. Subscribe, and I will see you in the next file.